Start recording already. So we recorded. So I want us to be attentive, pick up our pens and book to jot things down. This is a very crucial meeting, a very important meeting. I want us to take it serious so that we can increase our winning trend and reduce our losing trend. So that's the purpose of this meeting. That's the main purpose of this meeting. So we're starting now. So now looking at that data I collected today, we have about 22 inputs. Just have, let's say, the 5 traders here tonight. 5. Okay, let's say we are now. Okay, now 6 traders here tonight. It's kind of low, but we continue. We are recording, so I will share this recording after this meeting to a group. So now, reason why traders lose money while trading is because of different factors. Number one, you don't know how to analyze the markets. As number one reason why traders lose money. If you just enter the market without knowing the direction of the markets, where the market is opting to, where the market is going to, you just enter the market randomly, just enter short or long without a proper analysis or the right analysis. You cannot always be right, but at least if you can have 40% accuracy, you can still be on the winning side. You can still be the profitable trader. All you need to be a profitable trader is for you to have 40% accuracy. If you can have 40% accuracy, you will be a successful trader. Okay, all you need is 40% accuracy. So for me, looking at myself, I have around 80% accuracy. That's for me. When I calculate and check my previous trade, if I pick 10 trades, how many trades will I want? I have 80. Some of us might have 40. 40 is okay for you. So if you have 40, for example, let's say everyone here in this training now have 40% accuracy in your technical analysis. Okay. And you want your profits to be more than your losses. What you do is, number one, risk management. The reason why most traders lose money is because of that you don't know how to manage your risk. You don't know how to manage your trades. Okay, that's the reason why you lose money. The reason why my portfolio keep increasing is because I'm not too greedy. Okay, the reason why most of us lose money is because we are too greedy. And when we tell you these things, you keep doing that same thing, thinking that the next time you try to risk, you will make money back. And it doesn't work that way. You try it again and again. If you're not managing your risk, your risk well, you will keep losing money. That's the truth. You will keep losing money. So it's very important that you know how to manage your risk. We can't do without risking. Okay. Sacked money can't make money. Okay. If you leave your money in the bank, it will remain there. If you leave 1 million in bank today, come back in the next 10 years, what you mean there is now something down there. No, it won't be more than up to 1 million again. So that's why we have to take risk with our capital. Fine, yes. Take risk. There is no reward without risk. Okay, there is no reward without risk. I want us to know that. So, how do you become a profitable trader? That's what I want to discuss. And I want us to pay close attention to this. Now I'll be sharing my screen of one of my accounts. I opened the account purposely because of these because of training like this. Okay, probably if I want to go live sometimes, I'll open the account for that. So I have we in VIP we started in VIP we started a plan, compounding plan. So the account we use for the compounding plan is what I'll be sharing today with us, so that we see what I'm talking about. So I'll use that account to show you how it is possible to manage our risk. Okay, let me try and share. I'm coming. Okay. So this is my Bybit account. The Bybit account. Now, this account is for compounding of profits. You know, if you want to compound your little capital to huge capital, you don't have to do that in a week. You don't have to rush it. Little by little, as you keep trading little by little, to be adding up. Before you know it, to be something big. Okay. So now, let's for example, if you want to trade, mostly what I trade mostly is BTC USD. So for example, if you want to trade BTC USD, okay, click on BTC USD. BTC USD. Click on BTC USD. Okay, this is the chart. Okay, this is the chart. So let's say you've done your analysis, you know where the market is moving to, you are sure of the direction, and you want to pick your trade. Okay, this is where risk management comes in. We have two type of trade. We have affiliated in features. We have affiliated trade margin, and we have the cross margin, right? So let's start with.
Well, I'll do it.
Hello, can you hear me?
No. Something well, you feel like no debit. No, she know my number correct. No, the check. Torí mo ti ṣe data ń bẹ̀ nírọ̀lẹ́.
Please, so who is that? Please mute your mic. Okay, thank you. So let's start with isolated margin. So isolated margin. So I would advise you use 10x. Okay, this is number one thing you should know. If you want to use isolated margin to trade, use 10x for a start. Use 10x. So I save this. So I save this. Now, this is the money in this account now is $882, right? Okay. Now, if you want to pick trade for BTC, use limit order. Can you hear that? Sorry, I'm coming. To use limit order. For example, if you want to long BTC now, you want to enter, and you want to enter, you can just use, for example, if you want to long BTC, then the price you want to enter is 42,500. Just type 42,500. Now you have to use 10, and so you have to use 1%. You have to use 1% of this account, just 1% of this account for each trade. Please listen carefully. You have to use just 1% of this account for each trade. Some people will go and use 10%. Okay, we are in isolated now. Okay, isolated now. Now, if it's isolated, you have to use 5%. For isolated, you have to use 5% of this account. For example, now this account is, let's assume this account is $800. For example, let's assume that this account is $800. 5% of $800 is $40, right? So you have to use $40 of this account. So is 5% of this account. You can see here now. Here. So yeah, how will I show you this now? How will I show you this? Converting this to isolated, I should use my. Okay, so why am I? Okay, you can just come here and drag to 5%. You see, it's 15, it's 10, it's 5. All right. So it's 5%. If you check where open long is now, under it, you can see $43 under. Okay, for that is 5% of this account. Is what is used for isolated margin. That's what you should use for isolated margin. Please listen carefully. It's what you should use for isolated margin. So after you've set your limit order, then you've put the contract. That means for 5% of this of this margin is 0.01 is 5% for this account. That means your order value is 425 USDT. 425 USDT. That means you are using 425 USDT to enter this trade. Okay, so you just click on long. So when you click on long, you now see now that your liquidation is around $38,000. I mean, if BTC drop to $38,000, that is when you get liquidated. Okay, so now you just click on confirm. So you click on confirm. This is your order. Your order is already placed already. Now you now click on modify to set your stop loss. Now, if you are taking signal for me, okay, if I tell you that your take profit is $40,000, that means if it is $40,000, you will get $55 as your profit. Then I can tell you your stop loss is $42,000. That means if you hit your stop loss, you'll be losing just $5. So the risk reward is high. You are losing $5 and you are to gain $55. Okay. So I just click on confirm. That's all. It's set already. Okay, set already. So if you come back to it, you see that it's already set there for you. So that is isolated, but I don't use isolated. I use margin. I use cross margin. So I don't use isolated anyways. So that's that for isolated. So I like using cross margin, and all VIP members, I've advised all of them to use cross. So I use cross margin. I use 100x my cross margin. I use 100x for my cross. Okay. This trade now, I've take profit 1, 2, 3. That's why you see that the profit is low, $6. I've made over close to $80 on this trade. Okay, I've closed it up to like 3 times. I've closed the trade up to like I've take profit up to like 3 times already. All right. So if you just use 1% of your account for cross is huge on its own. So let me just explain cross to you so you know understand cross. Cross now, for cross, you use just 1% of your account for cross. The reason why I like cross is that it's easy for me to ladder in using cross. For me, it's easy for me to ladder in using cross. For example, now if you want to trade cross now, and for let's say we want to long BTC, you can see my liquidation here now. My liquidation is just $0.5. Liquidation is just $0.5. So that means for me to even get liquidated now, my account must go back to $0.5. Understand? My account must BTC must retrace back to $0.5 per coin before I can get liquidated. Okay, that's why it is interesting using cross. So cross leverage 100x. Okay, let's for example now, if you want to long BTC here now, and let's say your entry is $42,000. Okay, so and you have to use 1% of your account. 1% of your account of $1,000 is $1,000 is $10. That means for this trade, you enter with just $10. Okay. So let's say you want to enter with 0. That will be 0.2. 0.2 will give you $10. Just check under open long. You see the price there, $10. You can see $10 under open long. So at $10 to open this trade, that is 10% of these accounts of $1,000, $10. So here now is 9.65 USDT, but approximately it is $10. So you just open the trade. Now, looking at it now, you see that your estimated liquidation price is $1,914 USDT. That means BTC will have to retrace back to $1,914 USDT before you get liquidated. Okay, which is very, 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 very impossible. Okay, it's very, very impossible. So let's click on confirm now. So we have our this thing open. Just come back here, click on modify, then you go to take profit and stop loss. Then you can put your take profit to 40, let's say $43,000. That means if BTC increase from 42 to 43,000, you'll be getting $20 on this trade. Okay, $20 on this trade. If you think it is too small, okay, it is not too small. Now, if you do this for a week, $20 times 7, that is $140. $140 times 4. $140 times 4 is how much? That is over $500 already. Okay, that is $560. $560. That is over 50% of your account. Now you can take your pen and do the math. Well, over 50% of your account times do it in 12 places and see how much this $1,000 will yield for you in a year. And to be honest with you, sometimes you have to ladder in. So when you have to ladder in, you will still have to increase your position. Assuming you enter at $42,000 and Bitcoin dump to $41,000. Okay, you will still have to open another position with under 1% position with 0.02 again, so that you will reduce the position, you will reduce the price. Assuming if you ladder in at that 41, your initial entry point is 42, right? When you ladder at 41, it will reduce your entry point from that 42 to around 41.5. Understand? It will reduce it so that if price bounce back, you will get into profit early and you will make more profit. So the explanation is that you don't use all your arsenal to enter the trade. You don't use all your arsenal to enter a battle. Trading just like you're battling with a lot of traders. Okay, you're battling with a lot of traders. Okay, so if you want to enter into battle with traders of in the world, you don't enter with all your arsenal, all your capital, you don't enter with full force. You don't risk it at once. You don't just go in at once. You apply dollar cost averaging. You buy little. If it goes down, you buy and that whenever you buy 1%, you can just buy 0.5%. If it goes down more, you enter with another 0.5%. So 0.5% of $1,000 now is 0.01. If it keeps going down, since you are sure of the trade that this trade will go up, is a long trade. It's just a little correction. Okay, you ladder in. When you ladder in, it's easy for you to come back into profit than you going in with 5% on cost leverage at once. Then your account will now start having this fear that you are having fear that you might run into loss. Your account will get liquidated. No, you do it little by little, ladder in. That's the best way to trade. Okay. Sorry, that's the network issues. All right, so what is down to say? So ladder in. When you ladder in, you will most likely win that trade if your analysis is correct. Because sometimes when you analyze, the price might want to just go below your entry point a little bit, then bounce back up and you come into profit. So from that, I'm even more happy when I'm at loss, so that we have more chance to even open more positions. So when it comes back in profit, I will make more profit. Okay. So in VIP room, if you notice that sometimes we make more than $20. Okay. If you are even using $1,000, sometimes for me now, I make yesterday and day before yesterday, we trade open, we trade long and short. That very day on this compounding account, I made over close to $200. Okay, close to $200 doing long and shorts. Okay, and I use those 1% of my account, but sometimes I ladder in when we're at loss. I have to open another position, and before we know it, the trade went to our direction. So you ladder in. That's how to trade. You ladder in on your position, but sometimes you may just hit your entry point and start going up. $20 is okay for you. Sometimes that $20 might even be $40 because BTC might increase by $2,000. You've done that a lot of times, and you've traded that kind of trade a lot of times, right? Yes. So it might even that was a trade with that BTC decrease with $10,000 difference. So sometimes it's not. You might not trade once in a day. You might trade twice. Okay, you might trade 3 times. So you even have more confidence to trade 3 times in a day when you are entering the market with low risk. You're not exposing yourself too much. When you're exposing yourself too much, you won't be able to trade more than 1 time a day. And that 1 time you will trade with fear. This trade might go against me. If it's going against me, I might lose this trade. So you don't have to trade with fear. Trade with full confidence. Using 1% of your account is okay for you. You can make, if you are using $1,000, you can make $60 in a day. You can make $20 in a day. You can trade twice. You can trade 7 times. You can scalp using 1% of your account. You can do scalping easily. Okay. So that's that. That's that. That is I want to say. Okay, I think it's time for a question. Please ask your question. Time for question.
Hello.
Hello.
This Nalek on the talk. Good evening.
Good evening. Yeah.
Thanks for the explanation. I really appreciate it.
You're welcome.
My question is, in cross leverage, let's imagine the way you explained, like using 1% of your account.
Yes.
So my question is that when the trade is going on, and does the trade takes from the other remaining amounts on the account? Like, I don't really understand. Like, let's imagine I'm using $1,000. 1% of $1,000 would be like $10. I'm now. My question is that in cross leverage, is the trade going to be using only $10, or it can take from the remaining $999?
Yes,
to trade
sure.
for me?
It will take from the remaining 900. Okay, let me do. Okay, let us go to. Let us trade. Let's trade. Our time might not permit us to do all this because the time is ticking.
Okay.
But let me just do long. For example, this one will not work. SRP USDT. Okay, let's do ADA USDT. Say you want to long this now. Price to that is market price because of. Then you want to use 10% of this account. Then 10% of this account should be 100. So we long it. You can see now that our liquidation is 0.0001. Okay, so your liquidation is already far. You can see our liquidation that yellow color is your liquidation price. So even though you're using all your capital to trade, so even though the trade is going against you, you get liquidated when price hits 0.0001 in ADA, which looks very impossible. Okay.
Yeah.
But like using isolated, we really draw your liquidation price closer. But if you are using cross and you're using 1%, your liquidation is very far, and then you have the chance to still ladder in. Even though you still ladder in, your liquidation will still be low. So even though the price going against you, you can still ladder in, and when the price goes up, you make a lot of profit. That's how to trade. With risk management, so that you be confident, you won't be scared, you won't be emotional when you're trading. You just leave it to run. You understand? So that's how it works.
Thanks very much.
You're
This
welcome.
is the main problem I've been facing.
Okay.
Like that isolated make me trade in fear. Sometimes it might not even reach my liquidation price, but I be scared
You'll be scared.
when it's
Yes,
getting
you'll
closer.
be scared. That's it. You'll be scared. So it's better you trade with cross. Then you use just 1%. If you use 1% of your account in cross, you will still make more profit using isolated. Because in cross, you use 1%. When it goes against you, open on that position. You can open it. You can might not open. Might not. It's not necessarily you open 1%. You can just open 0.5% to ladder in. If it keep going, ladder in. Until you see that this trade is invalidated and you should get out of the market, or it's close to your stop loss, you can just leave that trade and open another trade. So you can still have another chance to open another trade. You make profits. It's not possible for your account to get liquidated, or your money to get liquidated on cross is when you lose trade up to 100 times, and it's not possible you lose your trade 100 times in a row.
It's not possible. Like for this type of trade, it just open to get liquidated. That means the market has already crashed. For that to go to 0.001.
Yes, wow. That the market have already crashed. And then you have even set a stop loss. Your stop loss here now, our stop loss here can now be $2. So if the market goes to $2, you just reset $8. It's not $10 is not even up to, let's say, okay, that is 3% of your account. Just 3% of your account. And then you still have more chance to open more trades to recover back. Okay. So I've been using this, and then my portfolio have been increasing steadily.
Thanks very much.
You're welcome.
Good evening.
Good evening.
Yeah, transfer.
Okay, so if this meeting ends, just click on the link back and enter back. And enter the meeting back. Okay.
Yeah, I have a question.
Okay, ask a question.
Okay, yeah. Is it advisable to open a long and a short position at the
same
time?
Yes, it's advisable.
Probably.
If you know what you are doing, edging, you can edge your position.
Like, let me give an instance. Okay, maybe I got into a trade yesterday, probably, okay, let me say Bitcoin at 42K. Then it went to 43. I was already in profit on long. But then I was so sure it was going to come back to maybe like 42.5 or something. But then it was still going to rise back. And I wanted to key in that opportunity to short from 43,000 to 42.5. You understand?
Okay.
Then I was going to close the short at that point, then still leave my long to continue processing. Like, is it a good thing?
It's a good thing now. If you are on long and you see a signal for short, right, that the market is going to go down, right?
Yes, like a slight short.
Yes, and you can just do it like scalping, right? Yes, you can now. You can ask me. I'm on long now.
Scalp in between.
Yes, I'm on long now, and I want to short BTC. I just click on. Let me use a very low distance to enter. Just click on shorts. Your liquidity.